Well, hey. Hey, everybody. We are live at 5 on the Sunday afternoon. Live at 5 on Sunday afternoon. Trying to get me enough everybody can be able to see what's going on in here. So you can see what's happening, see what's going on. Come on in, as they say. Come on in, get in here, get in here. Get in here. That's what the guy on Instagram always says. I don't even remember his name. I usually say he always starts with the get in here, and I keep right on scrolling. Well, good. I sure hope everybody had a really good weekend, is having a really good weekend. I sure hope you're enjoying the weekend, getting a little downtime, a little rest, a little bit of time to reset your mind. That's always important on the weekends, especially as a trader, because so much happens during the trading day and the trading week. So many hits on your nervous system as you're deciding which trades to go into, as you're closing up your trades, as you're watching your trades, hoping it doesn't go against you. If it is going against you and you are thinking about what am I going to do, all of those things are affecting your nervous system. Right, you're keying up, you're kicking out cortisol for the stress. We're doing all the things, so you definitely need to take the weekends to just kind of woosah, woosah, take you a little bit of a break, give your system a pause, let it do its thing. A lot of things are opening up on my computer. Hopefully, they're gonna all be working fine and it won't be skipping here, but I wanted to say that definitely take some time on the weekends. That is also study time. I will say that the weekend time is also study time. Maybe one of those days where you take several hours. Maybe you use on demand in Thinkorswim. I'm a fan of the on demand feature inside of Thinkorswim. I'm a fan. So utilize that, maybe do some back testing, maybe to see what's going on in your trades and in your strategies to confirm, get comfortable. That's really what on demand and the sim are for, or paper trading is really for, getting yourself comfortable with your strategies, right? Getting yourself comfortable with your strategies. Let me minimize that. Let's see here. We got a little bit of an agenda today. I'm going to talk about, what's kind of coming in the market as far as meetings and those kind of things, the things that can really affect the stock prices. I'm going to talk about some earnings, expected earnings this week, and some of those that are anticipated to cause ripples and ruffles. Ripples and ruffles. Yes, that's what that made me think about the chips. Ruffles is a brand, a real brand. It's called Ruffles, but the people who try to copy off the Ruffles, they'll call theirs Ripples. You got the Ruffles chips and the Ripples chips. They don't taste quite the same. Just so you know, the Ripples don't taste like the Ruffles. Not quite. Like that Mountain Dew that tastes a bit different than the Mountain Lightning. I always wonder, where do they come up with the off-brand names? Mountain Lightning. Like, I'm not drinking that. I don't think I want to drink something that includes some lightning from the mountain. That sounds dangerous. Anyway, we're going to do looking at the what's happened last week a little bit, what's happening this week, what's coming up as far as earnings and meetings. Then we'll look at some possible or probable trades for next week. If you hang on to the end, we'll do that along the way. Okay. So let's see if we can get into it. Let's get into it. I think I want to talk first. Let me see if this is going to show me the right size on the screen that I'm interested in having on the screen. Gotta have the right size. I'm sharing screen one. Yes, I'm is. Yes, I'm is. Hey, if you're here and you want to say hi to me, put me a comment in the chat that says hello. Hello. You know, every time that I hear that, I always want to think about the Lionel Richie song, but then it's also the Adele song that starts with "Hello." Okay, so we're looking at the chart. So if we go back first to like the weekly chart from last week, we can see with SPX, which is SPX S&P 500 overall look at the market. It's a way to look at, you know, all the stuff that happened at one time. You can see here last week was a green candle, pretty big green candle. I had some trend lines on here. My trend lines for those who are, you know, charting experts. I think I had that trend line for some other reason, but there we go with that. Got a little trend. Come on, up there. Got a little trend going there, and then the trend line on the top. Oh, that might have been a daily trend line, not a weekly one. Anyway, trend lines definitely should touch two different things, letting you know that there's a trend happening. See if I can get it to click there. There we go. Click properly so it can actually support us, right? This is the weekly chart. We had a big green candle, pretty big green candle, but we got a tall wick up here, letting you know that price was trying to go up last week even further. It did go up even further, but that got rejected, and it ended up closing the week at like 43.27. I believe 43.27.79 is where we closed the week. So, hello, Royal Diadem. How are you? So that's where we closed last week. But you see this is a support area, nice little support setup here, right at 42.85, the bottom of the close of this candle, which was, no, not that's the open of this candle, which would be 42.84. Would be the support down here on the bottom of this one. 42.84 shows you that that was support. It hit that, boom, and it went on up the other way. Went on up the mountain, going to the other way. So that's the weekly candle. We had a green week last week. And the daily candle, though, this was the 5 days that we went through. We had 3 green days and 2 red days. Even though we had an overall green week, you see that we started from the bottom, started at 42.85, and we went on up and came back down to 43.27 is where we closed on Friday. I want you to notice here, even though I have this red line here was a trend line, I'm looking mostly, I watch mostly these moving averages. Moving averages play a good, strong support or resistance. I'm a fan of the simple. You know, some people are big on exponentials and suchy. So simple does what you want it to do, honestly. But moving averages will play support and resistance, right? They'll operate at support and resistance for you. So this is a 20 period moving average, which kind of pulls the stock back in. The 200 period moving average is what's down here. It is too strong. So what moving averages do basically is take the previous segments of time, depending on what chart you're on. I'm on the daily chart right now. So if I'm on a 9 period moving, if I'm looking at a 9 period moving average, then this moving average is taking the last 9 days, and then it's averaging that. It's called a moving average. So it's averaging that, and then creating a line all along the way. It's creating a line. This line is created. This is a 200 period. So a 200 period moving average is taking the last 200 days, averaging them together, and giving you a line, which is why I said it's very strong, because it's got 200 periods it's working with. It's averaged those together to say this right here is a strong spot, right? So the 200 period moving average is beneath us, right? It's hovering. The price is kind of dancing around the 20 period moving average. But again, moving averages can operate as support and resistance, right? Let's put some stuff on here. We do have a gap above us that the price went into a little bit and got rejected back, like, get out of here. You can't come. Hey, D-Investments from Ohio. What part of Ohio are you from? D-Investments. What part of Ohio are you from? I was born in Cleveland. I still have family up there, by the way. And I just was wondering. I'm just curious. I'm just curious about where you're from. Anyway, looking at something. We had the gap above us, like we said. It was a seller's gap because the price gapped down, right? Let me see if I should probably put me a little note in here that says this was a seller's Sellers, L-E-R apostrophe S, gap, which means there's sellers hanging out in here. They didn't get to sell. So that's why when price went in a little bit, there was a sell order of somebody is waiting in this gap. It's like, I wanted to sell my stuff. Oh, you're from Cleveland too. I wanted to sell my stuff and couldn't, so it came back down. I still have relatives up in Cleveland, by the way, in East Cleveland. And I got lots of relatives still up there. Welcome, homie. Welcome, homie. Appreciate it. Appreciate you hanging out with me. But yeah, so if price goes back in there again, it's probably going to want to grab a few more sellers. So you may see the gap. Sometimes gaps fill all the way at one time. Sometimes they go up and then come down and then go up, and they kind of dance around and dance in and out of there. All depends on what price wants to do. The southeast side of town. I hear you. My aunts used to live on like East 131st and Union. I had an aunt that lived on East 119th and Union. My godmother lived on East 116th and Union. They kind of all lived over there near each other. But I have I forgot what area my cousin lives in. My cousin and his wife moved out to the suburbs, moved out to the burbs. So they I don't know what part of town that is though. Okay, so watch your support, your resistance, up here with this gap, because gap is going to play resistance. The top of the gap, definitely 4402, definitely would be some resistance there. I think I showed you here the support, but support here is going to be, if we're looking at straight support, it would be down here around the 4250 area right here. This big candle, this big green candle here would provide some support. The bottom of that, which is 42, the open of this candle, 4234. It's a pretty far ways down, but that's where we are as far as support goes. What can we expect maybe for this upcoming week? Wow, it's a very small world. So what can we expect for this upcoming week on the S&P 500? Of course, S&P kind of does its own thing and, goes the way it wants to go. And it's highly, because it's comprised of things like the Apples and the Microsoft and NVIDIA and all those Meta, all those kind of carry weight. Those things matter, right? The other stocks and what they're doing definitely matter, and they take the S&P 500 with it. But there also seems to be the things that are important to the stock price, which is the fear of the people. Are they, buying shares? Are they selling shares? Are they dumping their stuff? Thinking about the economy, like what are the people doing, right? That leads us right into our meetings for next week. We got FOMC member Harker speaking on Monday at 10:30. There's a red folder happening at 8:32. Empire State Manufacturing Index is at 8:30. This is before the market opens on Monday. FOMC member Harker is speaking. It says orange folder at 10:30, right? Hey, Carla, how are you? Come on over to YouTube and join us so that way you can see my screen. Let me see. I'm going to see if I can put the link in the chat real quick. Hold on, y'all who are just watching and hanging on. Hold on. Let me put the link in the chat over on Instagram. Come back here. I don't know what I just did. Hold, please. I'm trying to type with my left hand. That's probably where I'm going wrong for real. That should be an M. There we go. Da, da, da. Oh, no. Do. Okay, hold to his hand. God's unchanging hand. Hold to his hand. All right. Oh, good. A friend that trades SPX. Who's your friend? Tell me who your friend is, because that's what we do is trade SPX spreads. That's what we do every single day. That's what we do. Every single day we trade SPX spreads. So 10:30, we got FOMC member Harker is speaking, orange folder. Hey, New Haven, Connecticut. 16th to the 20th, we got federal budget balance, which is all week long. And at 4:30, which is after the market close, we also have FOMC member Harker speaking again. On Tuesday, we've got FOMC member Williams is speaking at 8 o'clock in the morning before the market opens. Red folder again, ding, ding, ding. Core retail sales month over month and retail sales month over month. Hey, Anand. Those are red folders at 8:30 on Tuesday. So we had 8:30 on Monday, red. 8:30 on Tuesday, red. Now we have an orange industrial production month over month, which is an orange folder. FOMC member Bowman is speaking at 9:20. It says it's a yellow folder, but I'm of the mind that anytime the FOMC members start speaking, it just makes people nervous. So there's always at least an orange color. They put yellows on here, but I don't know. So we got some other meetings. Business inventories month over month. National Association of Home Buyers is at 10 o'clock, yellow folders. 4 o'clock is the tick long-term purchases. Wednesday, we don't have any red folders on Wednesday, but we got a few orange ones. 8:30 in the morning, we got building permits and housing starts. Building permits is an orange folder. 10:30 crude oil. Even though crude oil says it's yellow, I've seen every time that the market moves behind the oil. Just so you know, the market moves behind the oil. All right, Teresa. Wonder if she was in our community. Is her last name started with an H? She might have been hanging out with us. 12 o'clock, we've got FOMC member Waller is speaking, then Williams at 12:30. 1 o'clock, Bowman is speaking at 1. They got all these as orange and yellow folders, but 3 FOMC member people speaking right back to back is probably not going to be orange and yellow folders. The beige book shows up at 2 o'clock. It's a yellow folder, but there's another book that goes with the beige book that comes out. I think it's a red book. And that red book is what really moves the market, but it doesn't seem to be put on the calendar like that. The beige book is put on here. Harker speaks at 3:15, orange folder, 6:55, another FOMC member. Ooh, lots of FOMC members speaking on Wednesday. I really wouldn't, even though we don't have a red folder on Wednesday, I would still anticipate some volatility just because you got these FOMC members speaking all day long or throughout the day. The combination of them, maybe individually they might be yellows, which means low volatility, but when you start putting them all together, you might have a little bit, a little bit more rough waters. Thursday morning, we got unemployment first thing in the morning, the Philly Fed manufacturing index. Those are red and orange folder there. FOMC member Jefferson is speaking at 9. Existing home sales at 10 o'clock, orange folder. Red folder Thursday, ding, 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 ding. Federal Chair Powell is speaking at 12 o'clock on Thursday. That's should be like a double red folder, right? If some of these things are called red folders, him speaking should be like 2 reds. He should be like 2 red folders because we already know the market 12 o'clock noon. Usually they wait till like 2 in the afternoon so that we get closer to the market closing. But Thursday he's going to speak at 12 o'clock noon. And then some other FOMC members are speaking for the rest of the day. So you already know how this is going to go, right? You already know how this is going to go. Hello, OMG Zoe. Welcome. And then Friday, FOMC member Harker is going to speak at 9 o'clock in the morning. So overall, we have red folders on 4 of the 5 days. Well, take it back. We got red folders on 3 of the 5 days. But some of these things that are happening, even though they don't have a red folder here, definitely let you know that, there's probably going to be a little more volatility. What does that mean for you, though? What does that mean? Well, that basically means that, let me see, stop sharing. There we go. That basically means that you need to make sure that you have a strategy that, okay, I'm going to adjust this a little bit. You need to make sure that you have a trading plan. I'm going to go there. Make sure you have a trading plan that incorporates these various events. What are you going to do for entries and exits during these various events, right? Are you going to not trade on the days when, Jerome Powell is going to speak? That's a strategy, by the way. Watching is a strategy. Are you going to wait till after he said what he's going to say and then get in your trade? Are you going to get in first thing in the morning, planning to be out by the time he does his good talking? Now, we're a seller community. And for selling of options, we don't have to get in the market first thing in the morning. But what many of the people in my community do, they may get in, let's say Powell is speaking at noon or speaking at 2:00. They'll get in the morning with a plan to use the PDT hack. Till they're going to use the PDT hack in order to lock in their profits, and then they don't have to. They're not as concerned about whatever happens when Powell speaks, right? They're not concerned about that. PDT hack. Basically, it's a way for you to trade your spreads and lock in your profits and or a smaller loss. If you need it for that, you can lock in a smaller loss, right? You can do that and wait to see how the rest of the day goes. Maybe the rest of the day you just chill out. But other people wait till after the conversation has been had, and then they trade what happens after that. We let the volatility go nuts, boom, boom, boom. Then after that, you say, okay, looks like the market picks a direction and we ride with that direction. As a seller, you can wait all the way up to literally 359. I've entered trades at 359, collected a premium, was in the trade for 1 minute. Now, the good thing about selling is you know exactly what you're going to get. And the price does not have to move when you're a seller. It just has to stay away from your strike, which that in itself can be nervous. So it can make you nervous sometimes. But if all you needed to do is stay away from your strike is 42.70, even if it ends at 42.70 and 59 cents or 50 cents or 49 cents or 01. As long as it's not past your strike, your trade is good. Your trade is really good. So we do this on a daily basis where we're doing the 0 DTE. We're doing the 0 DTE. I put out a little freebie last week. It's a cheat code for doing the 0 DTE, the 0 days to expiration trades. Because people are really liking the 0 DTE and people want to see about how do we capitalize or how do I profit from 0 DTE. Now, this is going to talk to you about how do you use credit spreads to help you capitalize on the 0 DTE money every day. My community last week as a unit made about $2,330, something like that. I think it was a little bit more than $2,300. And actually it was a very light week because generally we make $1,000 a day at least, sometimes $1,200, sometimes $1,500. And we use those same 0 DTE credit spreads I'm talking about. We use them on SPX and XSP. And as a collective unit, we pull in profits every day using the same money. That's the whole piece there is I want to use the same collateral. I can use my say $500 for SPX credit spreads day after day. I take one $500 pop. One day I make 50, the next day I make 75, the next day I make 50, the next day I make 80, the next day I make 120, the last day I make $50. I don't make my money back. I pretty much, if you do it right, you can get to definitely over half of what your collateral is, and then you can move on to doubling your money. Double up. You can double up your money in short spans of time. All right. Let me share again so we can go on to talk about some earnings. Let's talk about some earnings. Grab your copy of that free cheat code there. Download you a copy and get in on that. Okay, where I want to go? I want to go to earnings. There we go. Can we all see my screen? I need this to be bigger, and I don't want this down here. Well, I guess we'll have to do it the way we're doing it. This is what I was telling y'all just now about last week. This was our results from last week. E2T traders, we made $23.32 last week as a collective unit. Some people may feel like that ain't a lot of money, but that was 8 or 10 people. So if everybody pulled in $233 more a week, I think everybody here could use an extra $230 a week. Even if it didn't meet all the needs, if it met some of them, $230 would cover a light bill. $230 will cover some gas monties. $230 might buy some grocery. Yeah, $230 can help you out. So check in on that. You can grab hold to that free copy I just mentioned in the chat. I mean, in the little blurb down there. So let's talk about earnings this week. I really need this to be bigger. So let me do this. I need that to be bigger. Let me go here and see if I can get it full size from here. There we go. That'll work out better for us, won't it? Won't it now? That'll work out better. All right, so we got some earnings coming up this coming week. Charles Schwab, we just had a few banks. I think, what was the one Friday? JP Morgan? JP Morgan might have been Friday. I'm looking over here because my brain is over here, I guess. JP Morgan was Friday. The market really liked what came out of that, right? The market really liked what came out of that. So Charles Schwab is going to be tomorrow morning before open. Yatra, not sure who they are, but they're having earnings tomorrow morning. The Service First Bank, ELS, First Bank is going to have earnings tomorrow morning. At the banking, they always lead the way. Tuesday morning, Bank of America, Lockheed Martin, Goldman Sachs is one of the highly anticipated earnings for this week is Goldman Sachs, which is going to happen on Tuesday. Let me take that off. I wanted to take that down. There we go. There we go. Goldman Sachs. Johnson & Johnson is going to be Tuesday morning. Prologis, Ericsson, BNY Mellon, and then Albertsons. Anybody live where there's an Albertsons still? I didn't think Albertsons was still doing groceries. I thought they were gone. Well, they're gone in our area. So, about like Winn-Dixie. Did y'all know Winn-Dixie has been purchased by Aldi? For those of you who still have Winn-Dixies around you, we still have a few here, but you can tell they just on their last leg. They're trying to compete with the likes of Aldi, and Aldi ain't Aldi ain't out here to play. They giving you a lot of the brands that you want, or they're giving you an off brand that still will meet the need at a reasonable price. And when people are looking for cheaper ways to, do things in their groceries, like for example, I needed some frozen fruit. I've gotten on where I'm making smoothies. I needed some frozen fruit for my smoothies. And I thought about buying bags of fruit at the grocery store, at the non-Aldi grocery store. And was like, no, I'm going right over here to Aldi. I can get frozen strawberries, frozen mango, frozen pineapple, and frozen blueberry. And I'm, $10, $12 in. I'm going to have 4 bags. I add me some spinach and some kale in less than $20. And think of bananas. I've got smoothies for the week, if not leftovers. I got smoothies for even more than the week. Less than $20. I go into Walmart, we have Publix here. Publix is, they say shopping is a pleasure, but definitely you're going to spend a little more money in Publix. You're going to spend a little more munchies in there. I did not even consider going to the Winn-Dixie frozen fruit. Oh no, because Winn-Dixie to me, I think is a little. Anyway, on to the topic. United, Interactive Brokers, those are all Tuesday after close. JB Hunt, Wintrust, Pinnacle, Omnicom Group, and some Fulton Financial here looks like. I think that says. They're Tuesday after the market closes. The airline's kicking in there. Interactive Broker is just like TD Ameritrade, their brokerage house for those who are in Canada and some other places. Wednesday, we've got P&G, ASML, Morgan Stanley's coming about, Abbott, Bank, U.S. Bank Corp, the NASDAQ, M&T Bank, Ally Bank, from what I understood, was having a few troubles. So it'd be interesting to see how their earnings thing goes. Citizens Bank is there. Another highly anticipated one is Tesla. Tesla's having earnings on Wednesday after close. Tesla doesn't necessarily move the market because it can be random, but it's still anticipated because a lot of people trade. It's very liquid. A lot of people trade Tesla. Netflix, Lam Research, Sands, Alcoa, Discover is here. Crown Castle, Columbia Bank, Zions Bank Corporation. Thursday, we got AT&T, Semiconductor, Taiwan Semiconductor. That's the one. We keep our eye on those semiconductors, just in case you didn't know. The semiconductors, they carry a lot of power, because we need those semiconductors for everything almost that we're doing these days. And Taiwan Semiconductors is one to definitely watch. American Airlines, Nokia, KeyBank, Truist is another bank, right? I'm sure there's some banks in here that I can't read them. On Wednesday, Thursday, aftermarket closes, Bank of the Ozarks, CSX, WD-40, Ocean First, I think it's a bank, Glacier Bank. Looks like a lot of banks this week. And Friday morning, we got SLB, American Express, Comerica, Huntington, Autoliv, Regions Bank, Berkshire, Hills, Bank Corp, IPG, right? Those are all the earnings that are coming up for this week. We don't really trade earnings in our community too tough unless we trade it after the fact. We trade because as a seller, sellers don't necessarily hop in on all the volatility that goes along with earnings because you just don't know which way it's going to go. And earnings can be a crapshoot, right? Some people have strategies that they use. Some people use straddles and they use, or strangles, they use those on earnings. But our community, we haven't nailed down a good strategy just yet. So we just don't trade them on the front side. We trade them after the fact. ATF, that's when we trade earnings, after the fact. That's when we trade the earnings. If you got any questions or comments, please put them into the chat. I need that PDT hack. I need to have a link put with that. So whoever was the person, which I'm thinking it might have been Jamie, if you type that, then I need a link to go with that. Whosoever type that in to help us out. Okay, let's now go and look at some potential trades for the week. If you follow me on the social media posts, you can follow me on Facebook, Instagram. I'm also on TikTok. I do TikTok videos to do some of those. But follow me in all the places. Definitely subscribe to the channel if you haven't already. Go ahead and subscribe to our YouTube channel so that way you don't miss anything. You don't want to miss anything when I put out new content. My computer is trying to manage all the pushing of the feed, and it's trying to pull up new things. My computer's going, you're asking for a lot, lady. Here's some cash secure put ideas. Cash secure put ideas. And if you don't know how to do cash secure puts, please, do a search through my YouTube channel. You can see how to sell cash secure puts for income. There's some YouTube videos about it that I've put up. But we've got a few here: Tupperware, Siri, Weight Watchers, Groupon, and Carvana. Basically, you pick a strike, you enter the trade, collect your premiums, and you just want the price to stay above your puts strike. It's a very passive strategy because you don't have to watch it. At the end of the trade, either you're going to keep the money that you already took in, or you're going to be put 100 shares. You're either going to be given 100 shares at the strike price that you selected if the price goes below that or is below that at expiration. And then you'll take those. You can take those shares that you earned or gained or were put, however you want to put it. You can take those and sell covered calls against them, right? A few weeks ago, I was gifted some EOSE shares. EOSE is a company that's doing, it's not lithium batteries. I want to say zinc batteries. They're a small company coming up and coming. I do have a predilection for new coming technology and those kind of things. And I thought they were doing an interesting thing. So I figured I would, participate with EOSE. Not trading advice. I'm not trying to convince anybody to do anything with their money. Just saying that these are the things that I've done. All right. These are the things. I'm not offering any investment advice. All right. Covered calls trades. You can get some GRTS, Siri, Finger, SoFi. SoFi, my darling. Anybody who knows me knows I like SoFi. I haven't talked about SoFi in a while though. SoFi and then Groupon. This is where you have to have at least 100 shares of the stock, and you can sell covered calls against your 100 shares. Many times the covered calls and the cash secure puts go together in the wheel strategy, which you see it running along the bottom of the ticker. is the wheel strategy. And the wheel strategy is where you sell puts. And then once you are gifted the shares, then you sell covered calls against them. And then when they get called away, which they will potentially get called away in the future, once they get called away, then you start all over. You sell puts again. You sell puts. If you get put the shares, you sell covered calls against them till they get called away, and then you start all over. Very passive. The whole wheel strategy itself is very passive, very passive. But I want to talk about, while I'm here in this particular segment, talking about the wheel, there is, I put out a post today about automated trading. Like, what are your thoughts for automated trading? If you got some thoughts about automated trading, maybe put me a comment in. But what do you think about automated trading? Like where it's done for you. Oh, I think I'm doing that. Where it's done for you, where you decide what strategy you want, you decide what stock you want to use, and then the bot or something, the automated algorithm does the trading for you. So I've recently partnered with Peakbot. Peakbot is the company. I always say it so fast, people don't know. It says like it's a Peakbot, but if I say it too fast, it sounds like Peabot. Peakbot. It's a K in there. So use Peakbot, and you can go to them and do a 1 month free trial where Peakbot trades the wheel for you, so cash secure puts and covered calls. I had Riot in Peakbot. It entered the trade for me, collected my premiums. I had the 10 strike. Riot closed at $9.92. So I was assigned those 100 shares, and which was fine with me because I was doing it for that reason. And I also wanted to see how did the bot operate when it had covered calls to do. So last week, the bot entered the covered call strike for me, collected my money, let it expire worthless. And this week, it'll continue to do that until those shares get called away. All right. So it does the wheel. It does iron condors. Iron condors are call credit spreads and put credit spreads combined. It's a fancy name, but it really just means doing a call credit spread and a put credit spread together. That's what an iron condor is. So it does iron condors on triple Q or SPY or both. You can pick that it does both. You can pick how many contracts you want it to do and which one. It enters on Tuesday, exits on Wednesday, expiring. It doesn't close, it just expires. It enters on Thursday and lets it close on Friday. The bot wonderfully will basically just trade what you want it to trade. It doesn't control any of your money that you don't. People get real nervous. Like, I don't want something else controlling my money. But, I have a question. How many of you have a mutual fund that you're doing at work? Are you doing a 401k that you have at work? And if so, you're already automated trading. You know why? Because you don't know that person. You don't know who's picking for you. You're already doing automated trading. People are like, I don't want some machine controlling. The machine's probably gonna do better stuff for you than you do for you. I'll tell you what happened to me on Friday. My triple Q trade, the price was starting to come down. The algorithm, I guess, was watching, which is what's supposed to be doing. And the algorithm entered in another trade to hedge the fact that my put credit spread, which was like 366, 367, was my strike prices. But the price had definitely come down into the 367, and it was, continuing to come basically. But the bot entered another call credit spread that was at the money. So the bot collected $43 more for me, right, with a call credit spread. So basically hedged that put credit spread, took in some more money. So when the day was all over, I had a put credit spread and 2 call credit spreads. So basically turned it into a butterfly or something. I'm not real big. I don't really know the different names for the strategies where you got 2 on one side and 1 on the other. I don't really know the names of all those. So anyway, I had 2 credit spreads, 2 call credit spreads, and 1 put credit spread. And by the time it was all over, I had I had two contracts. So it would have been max loss on the put credit spread that was getting breached. So that would have been $200. But I had already taken in about $40 on the two that my original entry. I had taken in 40, so I had $24, so $48 is what I took in originally, right? This trade was going to be breached for 200, so 200 minus the 48 left me with 152. The bot entered another trade for me at $43 a piece, so I collected $86 from that trade, taking my max loss, which would have been max loss of $200, took it down to $90, half off, right? Took our 152 and subtracted 86, actually $70. So the bot did that, because I would have just been sitting there hoping it, sometimes we're sitting there hoping it comes back. Is it going to do, if I was even, because it turns out when the bot entered the trade for me, I wasn't even paying attention to the market, which is another great thing for having a bot, is something that you're not watching it. It's a hands-free, it's happening all in your absence. Your money is just going to work for you. And you can control how much money you want to do. I do 2 contracts of triple Q twice a week. That's what I do. The other thing that PeakBot has is momentum trading for now. I'm not sure how long they're going to have that, but has momentum trading where it will buy shares for you and during the pops, and then it will close them. Never to have any zero DTEs on the stocks. It's not going to do that. But if you're interested, you can go to usepeakbot.com and try you and do you a free trial. Go to usepeakbot.com and have you a free trial for a month. Try out the different bots that you want. If you only get one, you can do one at a time. You can try, the wheel, if that's an interest to you. You can do iron condors. The reason I picked triple Q is because we trade SPX and XSP all the time. So I'm exposed to the S&P 500, but I'm not really exposed to triple Q. I don't really trade that actively like I used to. I used to trade all the time. So I'm letting the bot do the triple Q. I'm also letting the bot do some stocks. It's doing, T triple Q, S triple Q. It's doing SDS. It's doing Google, Airbnb. I picked like 4 or 5 different ones, and you tell it how much money to do for each particular stock. And then when there's an opportunity that comes about, the bot will enter the trade for you, and when it needs to close it, it'll close it. Profits are yours. In the course of the last 2 or 3 weeks, I've made about $100 hands-free. I made about $100 hands-free. And I believe I'm using about $1,500 of collateral. No, not even that much. Maybe like $1,200 of collateral. So I made $100 off of $1,200 over the last 3 weeks. I think that's pretty good returns. I'm cool with that. I'm going to let them keep doing some of this. I still will trade my XSP and SPX. And actually, they're looking at getting SPX and XSP in their platform because those are cash settled. And you don't have to ever worry about getting assigned any shares. But, that's coming. So I'm excited. If you go to peakbot.com, use peakbot.com. If you go over there, make sure you tell them I sent you. Arlissa sent us. Tell them Arlissa sent you to them. All right. Last but quick at if you did some riding. One of the stocks that we use for zero DTE that only requires $100 of collateral. And you know what, though, I hate to say only, because $100 is still $100. It requires $100 of collateral, is XSP. It's a daily expiration, right? It expires every single afternoon. What you do here is you're looking as a seller to do credit spreads. Now, if you're not one who's comfortable with credit spreads, please look through my channel a little bit more and check out the credit spreads videos that I have. I actually just put a few of them up this past week where I talked about doing credit spreads on stocks that are $50. If $100 doesn't suit you, you can use several. There's lots. Any stock that's less than $50 can be done on. You can use a 50 cent spread and only have to put up $50 of collateral. Check on my channel. That was the last video I uploaded, was the one that was doing credit spreads with just $50, making a nice little set of profits off of $50. Again, rinse and repeat over and over and over. $50, you use it. Now that would be week. You know, you for the $50 credit spreads, those are weekly expirations. But if you're gonna do XSP, you can do XSP every day, and that's daily expirations. I'm getting ready to share with you now. Do a quick little look to show you how you could utilize them on a daily basis. If you didn't yet, you should go ahead and grab. Oh, what was that all about? You should go ahead and grab that free Peakbot strategy. Not Peakbot, Lord. Peakbot is on my screen. You should grab the free copy of the 0 DTE strategy cheat code. You should definitely do that. All righty. If you're hanging out with me on Instagram, head over to YouTube so you can see my screen. So you can see the screen. All right, let's look here. This is XSP on the chart. What you do when you're looking for your daily setups, you definitely should chart on the daily chart, because you should know where your support and resistances are. You should know those on the daily chart. But if you're going to trade it on a daily basis, it's also good to see what is the price action for the day. I switched to the 15-minute chart. What is your support resistance for the day? XSP is one I see that you have to catch it usually before noon with a plan. What's a good plan we could do? First thing we can do is look for a breakout. You can look for a breakout. Do one here. Look for breakout. Breakout meaning you're going to see which direction has it chosen. Which direction has the stock chosen? Okay, I'm trying to make this so I can make it a little bit bigger so y'all can see, because that looks like it's super small to me, which means it's probably super small to y'all. Here we go. You want to look for a breakout. That's one thing you can do. You do want to have charted your support and resistance on the daily chart so you kind of know where would be resistance up above you. But you're looking for a breakout. In this case, breakout is going down. So you're going to do, in this case, you would look for a breakout to enter a call credit spread beyond your resistance, which is why you needed to have it charted. You need to have it charted on the daily chart so you can see call credit spread. And your thought here is to collect your premiums and to allow the stock to go on. Now you can also put on your PDT hack that got mentioned earlier. Let me go back over here again, because I'm not sure if you don't have my SPX playbook, spxplaybook.net. Facebook been tripping about me and this link. It doesn't seem to want to go straight to that link. It's all right though. We know how to make it work for us. Hold on, I was going somewhere. See if I can find it. I think it got mentioned in one of those rollings at the bottom. Okay, you're going to enter a call credit spread beyond the resistance. I mentioned the spxplaybook.net because within that resource there is something called the PDT hack. Now you can find, thank you, the SPX playbook is great. You can also go to my website, Educator2Trader.com, and it may not want to do it on Facebook. I'm just going to save myself. And look for the PDT hack itself. You can grab that resource all by itself. And what the purpose of the PDT hack is to show you how you can enter and exit trades that are 0 DTE without using your day trades. PDT is pattern day trader. And many times we don't do the 0 DTE strategies because we're concerned about our day trades. And that's realistic. That's real. That's a real thing to be concerned about. So you do want to be able to use the PDT hack, which is going to allow you to be able to enter and exit your trades and lock in your profits, lock in a smaller loss if you need to. Preferably you won't need to, but you can lock it in without using a day trade, right? So you can use the PDT hack. Let's say you enter, and I'm not going to explain how to use it, how to do what is the PDT hack, because I think you can find the resource. And I believe there may be I may even have a video. I'm sure I have a video on my YouTube channel that talks about like enter all the day trades you want, something like that. I think it's called Enter Unlimited Day Trades. You can check that out on my YouTube channel as well if you don't want to go get the resource all the way, right? But you would do the enter the call credit spread, and then you'd enter your PDT hack to lock it up, or you'd make sure that you picked a strike that was away from, that was above resistance, and you with the thought that price wasn't going to come back to it. Right now, trading with XSP, you've got $100 of collateral that you're using. You're using $100 of collateral. So your expectation, okay, you can't plan to use $100 of collateral and pull in a whole bunch of money, right? Not unless you're really trying to get very close and you're strongly risk averse. If you're using $100 of collateral, you can expect to receive about $10 to $15 in premiums. Now you can get more money if you want to get closer to the fire. Fire, boom, boom, boom. You want to get close to the fire, you can collect more money, but then you're just running the risk of having your trade be breached. So you'd rather not do that, again, unless you're sure about the direction. If you're real sure it's going to continue on direction, or you got a strong, inclination that you're going to be able to lock in your trade. But $10 back on $100 of collateral is a 10% return on your money. $10 back from $100 of collateral is a 10% return on your money for trading one day. So you want more money, you can do more contracts. And you do $10 today, 10 tomorrow, 10, 10, 10. By the end of the week, you've made $50 if you only take in 10, but you may take in 12. You might take in 13. You might take in 15. And when you're doing that, you're taking in $10, $12, $15 a day for 5 days straight. I've had many people in our community who make over 50% of their money back. I have one young lady who's trading. She started with $100 in our community. That's what she said she had. She wanted to get good at doing XSP. She started with $100 and she's traded it. Some days she'd make $10. Some days she'd make 12. She's continued. Then she started doing iron condor. She'd wait till the day got a little further down. And then after you did a call credit spread up here, and then once you're down in the bottom down here, you see we got a support area. Then you'd go and put a put credit spread underneath here. Okay, enter a put credit spread under here. Then you're basically doubling up your premiums, but you're not doubling up your collateral. You don't have to put any more collateral when you do this, because the broker knows that the price can't end up here and end down here at the same time. So because the broker knows this, they're only going to take your collateral or your buying power for one of these trades. So you spend $100 or you let them block $100 of collateral. You collect money on both sides. You collect $10 up here, $10 down here. You've collected $20 with that same $100. At the end of the week, she said she had made 67. This past week, she made $67 using $100. So she used $100. And again, this is no cap. It's highly likely, and this is not even out of the norm, right? To take $100 and use it all week and make $60. Now, where many people go wrong is we want the bigger numbers. You're like $10 a pop, $12 a pop. That ain't no money. And if you look at just at that, but that's 10 to 12% return. Look at it from that standpoint. But then you continue to rinse and repeat, and you compound it and compound it. And by the end of the week, she's made, and the chick made another $67. Next week, she'll trade again, do the same thing, right? Within a 2-week window, she's doubled her money. If you start with 200, you double it to 4. You start with 400, you double it to 8. You start with 5, you double it to 1,000. That's really what that comes down to. We want to pull in more profits, then you put on more trades. You put on more contracts based on your comfort level with the strikes. That's how we do that. But we pick a vehicle that allows us to do it in $100 increments. So if you got 100 or 200 or 300, you just rinse and repeat. We'd rather have slow and steady, something we can count on, than have the wishing on a star. You don't want to be wishing on a star. We're trying to get something that's repeatable. Repeatable. We want something repeatable. Right? There we go. So that's how we do that. You look for the breakout on XSP. Now, if you SPX, we do SPX every day too. SPX and XSP. I think if you're just starting off, you should do XSP and or trade in your paper account. Just that way you can get a good feel on what it, you get a handle on what it feels like to do the 0 DTE. And you can fit the times of where it fits your life. Some people can't trade in the morning. They don't have time. They're at work. They're doing other things. Some people would rather trade in the afternoon. Like for me, I trade in the afternoon because that's the time of day when I'm no longer teaching at the university. So 1:30, 2 o'clock, I'm looking for trade entries around then, because earlier in the day, I'm teaching and I'm focused on that. And some people are free in the morning and not free in the afternoon. There's some people who have jobs where the morning they have an opportunity to get into their trades and do the PDT hack, and the afternoon they're just riding out. It's really going to come down to what some people are free at lunch, and the lunchtime that is when they are doing their thing, right? That's the way we do that. I'm looking for thinking in my head of I think I had it in one of those banners. What is the link for the SPX training to let you know each of the times of day, that you can have a strategy that goes with each time of day, because everybody can't trade at the same time. Some people don't have time at all during the day. And if you don't have any time at all during the day, you should do cash secure puts and cover calls. Or you should use the bot. Let PeakBot do the work for you. Put your money, couple hundred, thousand, whatever it is, whatever amount of money you have available, let the bot do the work for you. If you've got $100, it'll trade SPY for you twice a week, triple Q for you twice a week. Maybe you got $200, you do 1 and 1, or $200, you do 2 in each place. But see, this is my point I want to make, is that we start where we are. We start where we are. Too many times we're looking, I don't have enough. It ain't all the things. Start where you are. If you start with $100, your 100 becomes 2. Your 100 becomes 3. Your 200 becomes 4. And while you're figuring stuff out or learning different things, let the bot do the work for you while you're learning. But shoot, there's too many opportunities out here to be pulling some cash out off these stock market streets, to be sitting back talking about, I wish I should have started. The best time to start was before, in the past. The second best time is now. Start now. And we're here to help. I want you to know I'm here to help, right? Again, be sure to like and subscribe to the channel. You can hang out with us in my membership. I have a Facebook group. Look over there. Find us on Facebook. You can find me there. Educator2Trader is our group. You can connect with me on Instagram and TikTok, like I said. Please subscribe to the channel on YouTube. We have a membership where I basically help coach these traders that are hanging with us. We have a we have a weekly training. This week, we're actually going to learn some more stuff about charting. We're going to go deeper into charting because that is so important That's going to happen on our weekly training this week. But these are, the weekly training and the membership are $97 for a month. And you've got a community you can trade with. You got a group of people you're with. You got some support, and you've got a coach who is available. Me. I'm the coach. I'm the coach that's available. In case you were wondering who I was talking about, I'm talking about me. Okay. I've done this for about an hour. I hope you got some value out of the time we've spent together, right? Please holler at me. If you need to help on figuring out where to start and what to do and what best suits you, send me an inbox. Send me a message. Leave me a comment. I usually answer most of my comments. And send me something so that way we can talk about how we can get you up and running, okay? We want to get you started and get you going. Alrighty? What we do here is two things, baby. We stay green and we get this money. All righty. I want to see you all later. Thanks for hanging out with me. Appreciate you.